Everybody, welcome back to the VIP Financial Education YouTube channel. It is very cold out here today. I think we're looking at hitting low teens and doing a lot of winterization. Newbie ranchers here with some new animals that we've never been through a winter with yet before, so learning how to winterize things and just trying to get that body temperature up. About to eat some soup and then get back out there into the snow. But before I do that, I wanted to talk to you guys about a new deal that's under contract and we're on our way to a closing table. It is a phenomenal investment opportunity. I wanted to share with you guys a little bit about some of the bumps and bruises that we've gone through for the past year and a half on this method of passive real estate investing and how we've been working diligently to try and overcome that. Because I think there's still so much opportunity. And the deal that I'm going to be featuring here today happens to be a 28% cash on cash return. And that's not even annualized. That's just during the timeline of the deal construction and getting it sold, which we're anticipating will be under a year, potentially well under a year. So let's talk a little bit about it. First and foremost, there's obviously some changes coming politically. We anticipate that that could mean really big things for this prefer investment method. Prefer lending is essentially passive real estate flips, easy returns. It's an acronym. And we've featured many different properties on this channel. Previously, there was a different builder involved that unfortunately has led to a significant amount of disappointment. I'm not here to try and sugarcoat that. And of course, it showcases that there are some risks that are involved with any type of investing that you're going to do. But identifying exactly where those challenges were and eliminating that in order to make sure that the recipe in general is not affected by one bad ingredient. And there is so much belief and conviction in this recipe that Michael Matthey, who's affiliated with the channel, has actually committed his own personal financial future to this. He's personally guaranteeing every single loan that comes through on this and future projects. He even relocated, he uprooted from Oklahoma and moved to Florida, where we're focusing efforts on projects at this point in the really high-end luxurious market out there. But because of this political transition, we anticipate that the high-end luxury fix and flip market will actually benefit greatly. We think a lot of money is going to be flowing into that state and into these areas, a lot of waterfront properties. We're talking multi-million-dollar properties. This property is no exception. So stick around to the end. We're going to go through every deal of this property. You can choose to either participate or not. You can certainly get yourself added to the waiting list either way, and that way, anytime a new property is released and we announce it here on the channel, you can quickly go out and be first to say, hey, I want to participate at this level. It does require at least a $50,000 minimum participation in order to get involved with any of these projects. And it really doesn't make any difference where that money comes from. I participated in one of the projects with the previous builder, and that was at $100,000. I actually used a debt weapon to do that. I am still waiting to get paid on that deal. And unfortunately, that deal has gone beyond the timeline that we were told to expect. We have since taken over a lot more control. Specifically, Michael is deciding to sort of spearhead as a project manager on these with the new builder, Southern Legacy by GCI. Those guys have been absolutely phenomenal so far. I'm not going to sit here and hold my breath or try and predict that things will continue to go well, because obviously we thought things would go great with Maven, and we're working through the challenges on that right now. Now, with that in mind, this does seem to be a tremendous model overall. We don't see any issues with the concept of this. The properties seem to support the profit margin expectations, which is how these high percentage returns can be offered to participants, which are lenders. You're essentially lending money, which is secured by the collateral of the real estate. The deals do get snatched up extremely quickly. As some of you know who have seen videos on this channel talking about these projects, usually by the time I'm talking about an address like I am today, the property's already gone. The buy-in has been claimed by, again, usually a collection of lenders. With a $50,000 minimum participation, it is fractionalized. So there can be 8, 10, 12 or more participants on the same project. It is totally passive, however. You're not going to be the ones out there swinging the hammer. You don't need to be the ones doing any of the architectural suggestions or the design of the build out or the decor or the fixtures. All of that is done at the highest level. Absolutely phenomenal work so far being presented by Southern Legacy by GCI. These guys have been consummate professionals. They have a huge track record of being able to do this. They are a construction company, so all of their staff are full-time employees versus dealing with sort of a discombobulated collection of subcontractors and trying to work it from a distance. They have their boots on the ground, and they are centrally located just in the markets that that these projects are now going to be concentrated within. So we do our due diligence as much as possible. We try to bring these builders in. They've got as much or more on the line and stand to lose everything should they not meet the expectations of essentially the buyers on the back end. They've got to make sure that they're building these out in the time frame that they expect to, under budget, get it on the market and get it sold for the values that we anticipate they will come in at. We do several appraisals on the front end of these projects. That's in order to ensure that the after repair values are anticipated accurately. And we're focusing on really desirable neighborhoods where there is a really limited supply. A lot of money. Many of these buyers are cash buyers, and we're talking $4, $5, $6+ million after repair purchase prices. So these folks are usually not going to be as heavily impacted by any type of economic fluctuations. They're people that are really, really well off, and if anything, might even be more wealthy when there are downturns in the economy. So let's talk about the specific project. This is at 730 Ponte Vedra Boulevard. Go ahead and look that up yourself. It's in 32082 postal code. That's in Ponte Vedra Beach, Florida. It's a 5-bedroom, 3.5 bath, 3,969 square foot property. It's 2 stories sitting on 1.25 acres, 1.23 to be exact. It does have private beach access, which is hugely desirable and obviously drives the after repair values up tremendously. There's an ocean and nature preserve nearby, so they actually have direct views of both. Obviously, this is a very prestigious area of Ponte Vedra Beach. This is considered where the old money goes, and the people coming in to buy these properties are not wanting to deal with the construction and go through the whole rehab process themselves. They want a turnkey property. The people that are selling these properties are generally aging out. They're either going into some type of assisted living situation, they're downsizing, perhaps it's an estate situation, but ultimately, these projects are usually outdated 10, 15, 20 plus years since the last update to the property. So they can be purchased at a tremendous discount. The timetable on this project, according to Southern Legacy by GCI, is literally about 120 days to get everything completed. Now, because of the experience that we've had for the last year and a half with a previous participant and the builder that was involved, we are encouraging everybody who is considering to get involved with any of these investments to really consider, what if it gets delayed? What if the market is different? What if an uncontrollable factor interferes with the timetable that I go into this hoping for? How long before I'm disappointed in the outcome? At a 28% cash on cash return, personally, I could see this thing taking 2 years and still being okay with it myself. However, that is not the expectation. The pace that we see these folks moving, this is realistic timetables to see a 120-day or maybe even up to a 180-day completion timeline, and projecting out to another 2 months or 3 months longer for that to sell. Those are just based on today's days on market averages and using what we're seeing as far as results from Southern Legacy and GCI Group. Now, with that in mind, I just like to work from the worst case scenario and work ourselves backwards so that we're not setting ourselves up for any type of disappointment if we choose to participate in any of these projects. If it gets sold in 1 year and you make 28% cash on cash and you didn't have to lift a finger, how many times would you try to get involved with those types of properties? And you can see why these deals just don't last. So in order to make sure that you're able to get involved with this or any future projects, email prefer, P-R-E-F-E-R, at VIPfinancialeducation.com. Make sure you include your first name, last name, and phone number. And if you don't respond, when we try to follow up to ask if you have any further questions or to get some general information regarding your circumstances and to decide whether or not this is going to be a good fit for you, then of course we're going to move on to the next who inquire about it. We are not short on people who want to participate on this, so we are trying to be as selective as possible and just make sure that everybody is doing this securely. The purchase price on this particular property is $2.75 million. The mortgage amount after the preferred lender's down payment is $3,089,751, which does include the construction holdback. The rehab costs on this property are $900,000. And I happen to know that $200,000 of that alone is just going into the highest end marble flooring that you can buy. It's really popular in the Florida area, especially by the ultra wealthy. So we think that that's really going to be driving the first impressions up when people walk in. It's going to be absolutely stunning. No dollar or cost is spared on these projects. I can assure you of that. $900,000 construction cost on it. The appraised ARV on this deal is over $5 million. They're anticipating being able to list and sell this at $5.5 million. The average price of sale in that specific neighborhood is $5.1 million. So they are very confident that they'll be able to get this on the market and get it sold for that price at 5.5. But that is why these profits being so large allow for the high 28% payout for the participants that are getting involved. And the total raise from this is $975,000. So imagine breaking that up into $50,000 increments. You could have as many as almost 19 and a half participants on this deal. Whereas some people are going to come in and say, I want to throw 200 in on this deal. I want to throw $500,000 in on this deal. There could be as few as one and as many as 19 and a half participants in just this one deal. And again, it's the gap lending that we as participants are offering. We're contributing the loan for the down payment, and we're getting a guaranteed rate of return based on the sale of that project. Whether it takes 6 months or 12 months, we still earn 28%. So imagine if it does get done quickly and it does sell within 6 or 8 months, you annualize out that annual rate of return on that loan, and you're talking about something that's going to be really, really hard to find a safe bet for to compete with that. Where it's completely passive. There are some safety mechanisms in place at this point. There's a ton of oversight with Michael having relocated to the area. He is on site now and able to travel to these projects and monitor progress on a regular basis. He has more say and control with Southern Legacy by GCI. That's their name. It's the Southern Legacy GCI group. Those guys are extremely receptive to the feedback and the design side. So again, because Michael is willing to relocate and personally guarantee every single one of these hard money loans that are being taken to purchase the properties, he is demanding and insisting that he has a lot of the control over how these run and making sure that they stay on track in order to hit the market quickly. I think the key with this is making sure that things are happening a lot more swiftly than they were for the last year and a half, which really, because of those delays, changed the market, changed the scope of the marketplace, changed the carrying costs of the loans that were involved. So most of that has been entirely mitigated at this point. With that in mind, I love the risk versus reward ratio of these projects. I think that it absolutely levels out. I will be investing. I'm excited to be done and transitioning away from the old builder into the new. I think there's a lot more reason to be optimistic about where things are heading. And so if you've ever thought about getting involved with something that can produce these types of returns, this is going to be something you want to explore a little bit further. Again, you can email prefer@vipfinancialeducation.com to get on the waiting list. Include a first name, last name, and your phone number. Make sure you get back to us if we try and reach out to you. We want to get your questions answered. We want to make sure you're a good candidate for it. This is not a hard sell process. You're the one that has to make the decision as to whether or not you want to participate with those opportunities. But again, I personally am getting involved, and I have a great deal of confidence that these are going to go the way they should. Generally speaking, 3 appraisals are done on the front end to know exactly what that after repair value is going to be. Generally speaking, there's a tremendous conservative estimate as far as where the total costs of construction are going to be coming in. So the extensive due diligence that's involved with these means that there's a lot less risk moving forward. And I think we've identified a lot of the breaking points that have happened for the last year and a half, and have been able to put something here that is just really, really promising, really encouraged about it. And so just know that deals are going to be killed. There may be times where you choose to get involved and all of a sudden an appraisal comes back and it's lower than anticipated, and all of a sudden the team out there says, hey, we're not going to do this. And that's exactly what you and I as lenders are going to want to see. We want to see deals killed. We want as much protection for our money as we can get. So that is something that I'm really, really fond of when it comes to this recipe. But ultimately, there's just not enough projects. Southern Legacy by GCI is saying that they can handle a bigger flow. They are promising that they can handle as many as 30 to 50 of these per year, which obviously brings in several per month if those projects come up. Right now, I anticipate that we're still going to be hitting about the 1 per month range. There are a total of 6 that are currently underway. Here's a big piece of news that I'm really excited to bring to you on this video, which is that per request from the team, they want as much visibility and accountability as possible. And we said, hey, what if we were to whip together a website so that you guys can continually go in and see the projects that are underway? You can track the update videos within that per project, and you can see the projects that are still available that you might be able to get involved with. And you can get to that website by going to preferaccess.com. That's preferaccess.com. Check it out for yourself. I think, again, this is a total of maybe 6 deals that are underway with Southern Legacy by GCI. This is a really good start with those guys, and the communication levels have been fantastic. That's another one of my major complaints about the last builder is the communication level was really good in the beginning, and it just started to deteriorate over time, and it's gotten to a frustration or boiling point with myself and other people on a number of occasions. So we're working through that. Like I said, I'm hoping that we can get that all turned around and get that, that mess cleaned up. But this new chapter of this recipe and these projects is I couldn't be more excited about. And obviously neither can Michael, who has literally modified his entire life in order to say that this is the best thing that you can get involved with. He's putting his money where his mouth is, no question about it. With that in mind, guys, I'm going to wrap this video. Thank you for sticking with me. I know these can get a little bit long. Check that video, that property address out for yourself. Again, one last time, it's 730 Ponte Vedra Boulevard. That's in Ponte Vedra Beach. That's in 32082. It's a really cool property. Email if you're interested in getting involved with any of these projects now or in the future. You'll get early access, and you'll get teaser videos, and you'll get alerted before everybody else does once you're on that list. So you'll get a one-day head start from everybody else. That's at prefer@vipfinancialeducation.com. Guys, with that being said, it's time for me to get out there, tend to some animals, and make sure that nothing's freezing to death, including myself. Until we see you on the next one, make it a great day, guys, and keep on cash flowing. Take care.